The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and I'm glad to have you here. And what a day in the markets. If you got any questions about any stocks, any trades you're doing, futures, forex, options, ETFs, binaries, or spreads, go ahead and give me a call right now. You can call me at 877-927-6648. Again, that's 877-927-6648. Let's go and check out where the markets are at right now. We got the S&P down 20 points, so it's finally decided to wake up a little bit. It's down over 1% on the day, and that was a bad week before this. Now that's a bad day. We got the Nasdaq down 33. We got the Russell down 25, and we got the Dow down 147. Out of all those, it sounds like the Russell is the least impacted, but it's actually the most impacted, down 2.73%. on the day. So an absolutely massive move right there on the Russell. Looking on over, the winner of the day so far, silver, down over 10% on the day as we speak. And this is one of those days that the deviation levels just get blown out of the water, implied volatility through the roof. And we got gold, it's on down right now about over 8%, down 129 points. And you want to talk about somebody calling it? Go back and listen to Friday's Bull Bear Binary Option Hour archive. And Tommy called the fall, like as it was starting to happen. He said, hey, we're going to go to 1,500 today, and or 1,600 today. So maybe 1,700. I don't know. It was so high up there. Anyway, so he was going through and just, calling, the prices as they were happening. And it was just amazing to, watch that unfold, right there while we were on the air. And he's like, hey, we're going to go to 1,500. And then he's like, but you know what? This thing's going on down to at least 14. And I want to say he may have said lower than that even. But, he's like, this is going to happen. It's going to happen fast. And he was right. And I was all over the gold this morning, so having a lot of fun with that. And making some nice profits there. And but, yeah, that thing just, flying down. And massive, massive velocity, moving really, really, really fast. And so, whenever you're trading those kind of markets, you got to be careful because you get in that wrong side. Even if you're going short when the thing's flying down, it also means it flies up really fast too. And so you could be short and still easily get stopped out. And so that's one of the reasons why I always talk about trading on Nadex, and or even combining. Okay, again, combining Nadex spreads with the underlying market, or combining even Nadex binaries, or doing something to hedge yourself. And so that's one of the issues I was going into, is just making sure that you do have some sort of protection, whether it be an outright Nadex spread, or whether it be going to the next level, and actually maybe you still want to trade the gold because it just keeps going, and maybe there's no great spread for you to trade, but you could still be shorting the gold futures and buying the spreads to hedge yourself. So there's a lot of different ways to play it. No matter what, always limit and control, your risk. And when it's moving like that, it moves too fast. It moves so fast, and you can't have your risk management tight enough. So, looking on over, seeing what else we got. We also got copper moving on down 2% on the day right now. We got oil down $2.55. And again, Tommy calling again, talking about all the commodities about to just get slammed. And so it's near almost a 3% move right now on oil. And if we look at corn, it's down $12 on the day, down about 2%. We got soybeans down 11 points on the day right now, so it's almost 1%. Euro dollar relatively mild at the moment, only down 37 pips from yesterday's close. Pound dollar down 26. Aussie dollar down 125. And I saw that starting to happen last night, and that was just moving and just kept going. And euro yen was down 84 pips right now. We got pound yen down 82 pips. We got U.S. yen is down 32 pips. The U.S. Canadian up 78, and the U.S. franc up 38. So King dollar is dominating across the board. And let's check out what we got going on as far as the fundamentals. So there's so many things going on right now. But there literally is 400 tons, 20 billion worth of selling that has took place on the COMEX exchange. So that's just an insane amount that you can see right there. It's just that massive move, and this thing's starting to unravel. And it's one of those things. It's a great day if you're controlling your risk, and it's a wretched day if you're not. And I was talking to a trader where we were going through some different things. One of the things I talked about is you got to ask yourself before every trade, am I going to be a trader or am I going to be a gambler? And a lot of people go, well, what's the difference? Is there a difference? There is. And if you don't know what the difference is, you're a gambler. But think about it. I mean, somebody you get like Phil Hellmuth, professional card player. Okay, some people want to say professional gambler, but that's not necessarily accurate. It's professional card player. He plays poker, but he also wins more championships than anybody, and that's not by luck. It's not by luck of the draw. Okay, you don't win that many times by luck. Okay, he's very systematic. He has statistics down. He knows what he's going to do, what he's going to hit. At a certain point, can it become luck? Yeah. Sometimes the river card can come up, or things can happen, or whatever. But you don't get that far that often without having very systematic method of how you do whatever it is your money management for, whether it be cards or whether it be stocks or futures or forex or whatever. And a gambler says, this is my cap risk on a trade. This is my risk on the day. Or not a gambler, but a trader says my capped risk on a trade, my capped risk on the day. Okay? And they have a very methodical, precise entry and a very methodical, precise exit. And not only a stop loss exit, but also a take profit exit, the method they will use for taking profit. Now, they could have several tiers and several methods they use, but they have a structured order to them, so they know, okay, I'm going to do this when this happens, I'm going to do this when this happens, I'm going to do this when this happens. They don't just randomly go in and, see what happens. And they understand the reality that trading is a series of trades. Trading is not a trade. And, what do I mean by that? Well, think about it. Let's just say you have a system that, let's just say it calls 70% winning trades. Okay? That does not mean, and this is a big mistake people make, that does not mean that you have a 70% probability of winning on this coming trade. It means over the course of 100 trades, not over the course of the day, not over the course, unless you have 100 trades in a day, I guess, but not over the course of a week, not even that's over the course of a month, over the course of 100 trades, okay, an actual decent sample size, not 10. Over the course of 100 trades, were you profitable on 70% of those trades? So let's say you had 70% of your trades were profitable, okay? And let's just assume, all right, that you have, we'll just make it really easy, a 1-to-1 risk reward. So you make $70, and we'll just say $1 to make it real simple. You make $70, you lose 30, you net 40. Okay? That's great. So over the course of those 100 trades, you came out with, $40 profit. That could be 400, 4,000, 40,000, 400,000, whatever. But again, I want to bring you back to the point of a series of trades, meaning you understand over the course of 100 trades. Now, though it's, highly unlikely, though I'm sure many of us have felt this way before, you're probably not going to get all 30 trades in a row that lose, out of the 30 that lose out of the 100 on a 70% winning strategy. But you never know when the winning trade is going to be and when the losing trade is going to be. You just have an expectation based on, how you traded, how it's worked for you in the past, whether it be ideally much more than back test, but actual forward test. So back test, it means it's worth forward testing. But it doesn't mean you should depend on it. But anyways, you never know. You got a 50-50, okay? You got a 50-50 probability that this trade is going to be one of the 70% winners or one of the 30% losers, which means you have a humility about you as a trader. And one of my mentors, when he taught me the definition of humility was, which I really keep this definition. I like this definition a lot. And what it is he said, humility is not an overestimation of oneself, nor is it an underestimation of oneself. It's an honest estimation of oneself. And you could apply that to trading as well. A humble trader is one who does not think that they're always going to lose, does not think they're always going to win, but always thinks that the next trade has a 50-50 chance of being a 70% winner or 30%, one of the 30% losers. Because otherwise, you have this thought in your head that since my system wins 70% of the time, then I can risk more because this trade has a 70% likelihood of being profitable, which is inaccurate. So over 100 trades, 70 of them have that, probability based on, your trading system. And if you have that correct assumption, that humble assumption that this has a 50-50 chance of being one or the other, then that will help put you in the right mind check, the sanity part of trading, of being humble enough to go, you know what, this trade could lose. Therefore, I need to risk appropriately. Now, it also could win. So therefore, I don't want to just, cut my profit short and not trade. But it keeps your risk management in check, but still gives you the boldness to move forward. And I can't stress how important this is for you as a trader to get down this simple concept, because it's simple, but it's complex, and the complexity is really within yourself. And I mean, there's nothing, you've probably read it in a dozen books. I've read it. There's nothing like trading to reveal who you really are. So it will pull all your weaknesses out, and it'll broadcast them to your pocketbook. And if you are going in with the wrong mindset, with the wrong expectations, it will come back, it will bite you. But if you're going with the right mindset, if your goal is to trade well, remember I talked about, am I a trader or a gambler? If my goal is to trade well, I'm a trader. If my goal is to push my winnings to compound all my trades, you hear all about compounding and everything else, I'm really starting to move into the gambling mindset. I think I'm playing blackjack. I'm a card counter. And, hey, if the last 3 lost, and based on the card count number I got, I have a high probability of getting these cards. So therefore, I should really up my bet. And I should do that for the next several bets and just keep going. What happens if you have 30 in a row that lose? Probability, probably pretty slim, but you could easily have 3, 4, 5, maybe 10. And you have to survive. As a trader, the number one goal you have as a trader is literally survival. Survival trumps everything, okay? If you don't survive, it doesn't matter. It's not what you make. It's what you lose. And correct expectations help keep your risk management in check. All right, we'll be back right after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we got a lot going on over here, just checking things out. Let's go ahead and check out what's going on in the news. And had our little, afternoon risk management lesson. So, if you just got, on the show, if you just heard that, go back and watch the archive later today and take some of those notes down. They will serve you very well. And it's just some of the most important things that I've learned, that I've been taught over the years as far as, how to, correctly manage risk and also how to correctly manage profit. It's so like it starts first with just your psychology, because you can have the best risk management plan in the world, but if you have improper expectations, you'll break your rules. So your sanity basically keeps you in check to follow your rules, and then your rules have to start first with risk management. Once you have that down, then you can start proceeding towards, okay, now what is the best instrument to choose to trade on this product? Maybe it's a future contract, maybe it's an ETF, maybe it's an option, maybe it's a Nadex binary, maybe it's a Nadex spread. So you can look at the different instrument selections. Once you've chosen those selections, and obviously you need to have a platform in there too. So I would sort of, put all those together of what instruments am I going to use, what platform am I going to trade on, What hardware do I need? What internet connection do I need? Like those 4 things. So you have that down. And you got to make sure you understand how the instrument works, how the margin works, how the leverage works, what the rules are, things like that. Like one futures broker I work with, if somebody, I recommend a lot of people to him. Some have large accounts, some have small accounts. And, he takes great care of them. But one of the things, people sometimes just don't know, they don't read through agreements or whatever, is if, let's say they have a S&P contract and they only have $2,000 in their account, but they only have to have $400 margin to day trade. And so they go in there and they're placing a trade, they're holding it, and they're thinking, I'm going to close like 1 minute before the bell, but 5 minutes before the bell, the broker actually manually will close a position because they know there's not enough money to hold that position in there for the initial overnight maintenance margin requirement. So which goes up to 4,000 plus, whatever. So they don't know that, and they get charged a $20 fee. Their position gets closed. So you want to know the rules. How does the broker work? How does the platform work? How does the margin work? What is the tick size worth? How do I execute orders? How do I put in buy, sell, stop loss, take profit? All those pieces. What can I do? What can't I do? Okay. Now once you have that, so first we had the mind. Okay, getting your psychology right, because that will guide your emotions. Then we have the risk management. So focus on risk before you go into even instruments, okay? Because futures may be too much for you. And it is too much for most people. And that's where something like maybe Nadex would be a much better option for you, because it will let you trade with less money often, also with defined risk. Depending upon the spread you choose, you could choose to not, no matter what, you never get stopped out of a trade. You could choose to get out of a trade, but you don't have to get out of a trade. So you actually can hold it without increasing your risk at all. And so there's a lot of advantages there. No margin calls, things like that. No commissions. You have exchange fees, but you don't have commissions on top of it. Well, once you got all that worked out, now you got to figure out what's my strategy. So I had my structure down. Now what's my strategy? And so my strategy, well, that's going to be, am I going to buy? Am I going to sell? Am I going to do a married call or married put? Am I going to do a straddle or strangle? Am I going to do ratio spreads? I mean, there's a lot of different strategies. Strategies are not systems. Strategies, and I mean, somebody could call a strategy a system, I guess, but the way I'm defining it, the way that it's often defined, is a strategy is basically a way to use an instrument. Okay, so like buying a call and buying a put to make a straddle. That's a strategy. When to do it, your rules for entry and exit, that's not a strategy. Okay, that is a system. A system is, now that I know what strategy I'm going to use for whatever's in the market, then these are my rules for entry, my rules for exit, my rules for take profit. Here are basically all my rules. And if I know, hey, if it has to close below this bar and I have a 10-tick stop loss, and my risk management's already told me I can't risk more than $100, then that's pretty simple. I do 10 contracts. If I have a 100-tick stop loss, I do 1 contract. So it automatically determines my size. But so you got to have that system in place so you're methodical. And I'll keep going on this whole subject when we get back right from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And today, I'm going through just a few different things on the structural requirements you need in trading. And we went into, first you got to have sanity. You got to basically say, am I going to be a trader or a gambler? So if I'm going to be a gambler, you know what? It's a lot more fun just to take your money and go to Vegas. At least you get free drinks. And, just go have some fun. And I mean, think about that. What happens when, for those of you who've been to Vegas, you go out there and you take a couple $100 down on the floor, 100, 500, whatever's your fun money. And you literally see it as fun money. You justify, you talk to your wife or your friend, you're like, this is this is my fun money, it's entertainment money, I really don't expect to take it home. If I win big, though, that'd be really awesome, be sweet, I'll be very excited. And, of course, maybe every once in a while you do win, and then you tell everybody about it. And you don't win, then, of course, it's, it was fun money. And, that's the gambling mindset, right? It's fun money. So, if you're trading with fun money, I guess if that's what you like doing, you can. But, if you're trading to make a living, if you're trading to be a professional, then you got to get out of that gambling mindset. You got to be the guy that, sort of plays cards a little bit during the week, but shows up on the weekend for all the guys that have just the fun money so they can take their fun money. And that's what a professional card player does. They go in to take the fun money from the gambler. Because the gambler is there for entertainment. They're going to provide a service of entertainment and collect the fun money. So anyways, let's see here. And going over and checking a few other things out. What we got going on is after you got the sanity, you got the risk management, you have the structure, okay? You have your strategies, you have your system with your rules for entry, exit, stop loss, take profit. Then you're going to go into the next piece, which is really going to be your style. So it's your analysis. Okay? And so that's where you use things like technical, fundamental, seasonal, and statistical analysis. Now, when I say technical, obviously, I mean everything on a chart. Okay? From your bar type to drawings to patterns to indicators to volume to price. I mean, anything that's data fed. Okay? Like right into your chart. Now, of course, I know you can add a lot of those things into your chart, but on standard charting platforms that most people know about. So that's, at the end of the day, technical rules, always, because the price on the chart reflects everything else. Okay, so that's your dominating factor. I don't care if the news was good or bad. If the chart's going up and the news was bad, you're buying. That type of thing. Okay. Now, fundamental. I don't so much mean trading the news, unless you're doing something like what I like to do, is I like to do the volatility move, the expectation of volatility. And so I'll buy and sell a straddle on Nadex, or I'll buy and sell a strangle, do a binary strangle or a spread straddle on Nadex. So I'm not so much talking about a volatility move, but I'm more talking about the fundamental, just being aware that a bus is coming and you want to be careful before you either get across the street or wait. Okay? So, tighten your stops, don't get in. That type of thing. Like hurry up and tighten your stops, or just stay on the sidewalk and let it pass first. So that's your fundamental analysis, knowing what events are happening when they're happening. And you're not going to be able to account for all the news, and don't be watching the news all the time. It'll throw you off. Okay, it's good to keep your eye on it, sort of. But if you're looking at news, if you're listening to news, if you're reading news, you're not looking at the chart. So if your eye's on the news article, it's not on the chart, and that's where it's at. So just being aware of the times when the announcements come out, what they impact. And maybe they don't impact, what you're trading. Well, that's good. Then you can cross that one. The bus is on a different street. Okay? And then you want to go into your, seasonal analysis. And that's just, we could go in, you can go into like seasonal cycles on a month, like the payroll cycle where people get paid on the 1st and 15th of the month. And if that coincides with the payday Friday and coincides with the holiday, you're going to have a lot of money flowing out of people's paychecks into 401ks, into stocks, therefore giving down days, okay, less of a down day usually, and giving up days, more of an umph. Now, they get paid on the 15th, which means their money doesn't go into the market for a couple days, right? So you want to be aware of that. Like, okay, if I got paid on the 15th, then my money gets put on my 401k, then it goes here, so it's going to take a few days to, filter in. So that's a longer term seasonal cycle, and there's all sorts of seasonal cycles on corn and soybeans and indices and currencies, and there's a lot of different reasons for those. But also, let's just say you're intraday trading. Just being aware of what time is the market active. You get traders all the time, and I understand it. They want to hop in and they want to trade when they get home at night from like 6 to 8. And I'm like, good luck. You might be able to pull off some Aussie dollars, some Nikkei, maybe some yen trading, but you're not going to get the massive moves usually. So usually that's going to happen later because most of the world's asleep or not trading at all. So, usually very little movement happens during that time. And so it's also less predictable because there's less volume and it's random participants. So you want to have a lot of the same participants at the same time with a lot of money putting a lot of orders in, so that way you can follow the order flow on the chart. And so that's where you start getting into the European session now. If you're a part-time trader and you really want to become a full-time trader, it's called getting up early in the morning. Early in the morning, which means you may have to go to bed later. So instead of trading from 6 to 8, you're going to get up, maybe you're going to go to bed a few hours early and get up a few hours, a few hours earlier, get up a few hours earlier. So, whatever it's going to take for you to do that. If you're committed to it, it may mean you have to get up earlier morning. I remember, back in the days when we played, you played sports in high school and you got up early and you went out to practice. So, went to the gym to work out, went to do, two-a-days, whatever. For football, things like that. So you got up early in the morning. So you just want to be aware that, that when does that volume occur? When is the London handoff, like between 8:30 and 9:30? And so therefore there's some really weird volatility stuff that happens in currency that can make it difficult to trade during that time. So, there's different things like that. And the more, this takes time to learn. The seasonal stuff takes time to learn. But you start to notice patterns, and you're like, oh, wow, the market moves a lot during this time of day. Yeah. And, when do people go to lunch? Because what happens is Asia's asleep, London's going home, Europe is at home and going to bed. And, depending upon what part of Europe you're talking about. And then floor traders are going to lunch. And at least half of them don't come back. So there's no volume really driving the market. Now, there'll be crazy days where they're not going to lunch. Nobody's leaving. Everybody's staying up late, and they're all trading, like today. Okay? But your average day, your average seasonal means that usually, you have cold days in the summer, though it's really weird and rare when it happens, depending on where you live. But, so odd things do happen, but more often than not, this is the seasonal cycle of when the volume occurs. And here's the thing. Asia isn't getting back up. Europe isn't coming back on. Neither is Britain. And half the floor traders aren't coming back. So you have this, random select group of people left at the end of the day. You have some volatility because you're going to have some funds come in. You have certain things that have to shut down and can't place any more trades, and also there's all these little rules on trading for big institutions and funds. But it's a different group of people. If you want the most solid group of people, you're really looking for that, past midnight, or like 2 a.m. to about 11 a.m. session. And, there's even some times in there that get a little bit flaky. So, but really, like that 7 to 11 or, maybe like 1 or 2, depending upon the, time zone changes and everything else. So about 5 or 6, you get some nice movement. And so there are more predictable times to trade. It just adds up in your favor. Can you learn to trade other times a day? Yes. If you're consistent, that will help. Meaning you trade at the same time every day. But it also helps if a whole lot of the other same people are trading at the same time every day. And then you have your statistical analysis. And that's like the diagnostic deviations that I talk about, that I post every day in the diagnostic spread scanner. You can get the access to that, in the subscription area. You get free trial, all that. That's included with it. And most traders have no idea what a deviation level is. They don't know what statistics are. And you know what? I never took statistics in college. Got a bachelor's degree, got a master's degree, never took stats. And my master's is a master's of management and human resources. So I took the math avoidance business degree, and which is pretty hilarious considering I'm a trader now. But it probably helped me because I didn't overanalyze the wrong information. But and it's always fun saying that at an expo where I'm on a big panel and there's all these FX traders that all have these pedigrees. And they're like, so what'd you do? And I'm like, well, and they're like, really? So they're all, they're sort of bummed that they spend all that time learning all that stuff. And I'm like, it keeps stuff. I don't have all the junk in my head from some college professor that didn't know how to make money. So when he's teaching finance, if he really made that much money, he'd be at Goldman. He wouldn't be at, a university. But anyway, so you want to have all 4 of those pieces together. How far does the market say the market will move? What's the statistical, chance of it actually hitting this level? And so where do I need to tighten my stops? There's so many, those little pieces. But you start building. And you got to put it all together. So you actually got to execute it. Okay? So you got to start. You got to go trade. And then once you've done your trades, then probably one of the most important steps is you got to survey. You got to look back over. And you got to go, did I do what I was supposed to do? Did I trade well or did I gamble? Did I follow my risk management plan? Did I use the appropriate strategy for what I saw in the market? The right instrument. Okay. Did I execute correctly on the platform? Or did I make mistakes? Because sometimes the losing days because you hit buy instead of sell. Just platform blows up, computer crashes, internet goes down. Stuff happens. Was it something you could fix? Is it something you could do? Could you put it in a backup battery, have a backup internet connection, have a laptop next to you? Do you need to get a better, faster computer? So a lot of things like that. What can I do to prevent this from happening in the future? And sometimes it's nothing. It's just you're going to have bad days. You're going to have losing days. But if the risk management was in check, then you're okay and you can come back tomorrow. So, and I'm not talking about going back and trying to second guess and optimize every trade. Okay, that's a very bad practice. When a trade's done, it's done. You don't second guess it. You don't wish over it. You just go, can I learn from this? And the biggest lesson that you need to be able to apply is, did I apply my rules or did I break them? And because one of the worst things that happens in trading is you break your rules and it works out for you, right? So you go in and you do something you're not supposed to do. You risk too much money. You don't take a stop, whatever. And you make a lot of money. And why is that bad? Well, it's bad because the reality is you just spent all this time like in this whole euphoria sense where you're like, wow, I'm a master trader. I knew I could outsmart the market. And you threw all your rules out the window. And the next time or two or three that happens, it's going to destroy your account. And then you're going to think your system's broken. Well, you haven't followed your system for who knows how many days or trades. Your system isn't broken, you're broken. You're not following your rules. You're not following your risk management. And then when you go, okay, wow, okay, it's me. Okay, I need to get that back in check. But then now you're sort of like, well, was it just me or was it my system? Because maybe what I changed where I didn't take that stop, maybe I need to have a different stop. And yet now you start tweaking. And you over tweak. And you're not trading. What's the problem with over tweaking? You're not trading consistently. So you want to have that consistent system that you follow. And if you go, hey, what did I do right? What did I do wrong? Okay, I did all this right, I did all this wrong, whatever. This is what I can learn from. This is what I can prevent. And as you notice things, because the more you watch charts, the more you're going to notice certain things happening over and over and over and over again. Then you can go back and you can back test it. And when I say back test, I don't mean like I'm going to try 100 scenarios on an automated back test. I honestly, I hate automated back test. There's only one possible benefit, okay? And like it stops at this point. Is this idea worth looking at all? Not is it a good idea? Not is it a tradable idea? Not will it work in the future? Is it just even worth, like if I just follow this 100% by these rules, these, programmed rules, is this idea even worth looking at? That's what a back test can do for you. From there, past that point, it means nothing. It just means it's worth looking at, okay? And so I'm meaning like literally you have like an auto robot trader that goes and back tests, like on TradeStation or whatever. Now, once you've done that, now you can do something like called market replay. Like NinjaTrader has this feature. Thinkorswim has this feature on their Think Back. And you can go back and, I think you can go back into it. And I think you only do days. I think you can usually do like minutes on Ninja. But, both are great platforms. And you go in, and it depends on maybe you're a day trader, so it doesn't matter, But you can go through like one day at a time, step by step by step. And they actually have like I take that back. Thinkorswim does have the ability now to go in and do replay on smaller intraday data. So you can do the replay on there now. They have that built in. They've had it for a while. I forgot about it. But you can go in and you do replay and see, because here's what you have to factor in is you. Because the back test does not factor in you. Your ability to take hit after hit after hit after hit and then take the next trade. And the ability to actually follow your rules. And the reality of fundamentals. News reports, things like that coming out. It's not going to factor that in. All right, we'll stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And so just wrapping up the session there and going into, when you do that survey thing, just don't over-optimize. Use backtest to let you know if something maybe is worth looking at. So when you see something on the charts, you could put that in if you have, the programming ability or access to a program. There's a lot of cool programs out there that make it really easy, like drag and drop. And then... but stop there. Don't go, okay, therefore this is a good idea. All right? Then go through and do market replay. Pull up something like Forex Factory to pull up news on those days. And then walk through it bar by bar. And place the trades and see what would you have done. Okay? So you manually do the trades inside the platform versus having the automation do it. So you're following the rules. And see if you can follow the rules. And how did it pan out? And would you have kept going? And, all that. Then... after you put in that time, okay, and that shouldn't take you more than, several hours, depending on how far you backtest, I guess, or how far you do market replay for. So you got backtest is like one step on something you've noticed, then market replay to start factoring in you and news. Then after that, you can move forward and actually start tying in some other things, such as, okay, you could go in and look at how you're going to, do it going forward. And by the way, your backtest and your market replay both need to account for your account size, the amount of money you would actually be willing to use in the account and risk. So just because there's $1 million in the backtest account doesn't mean you're $500,000 in reality. So you want to mirror reality as much as possible. Then you can forward test and demo. Once that's worked out, then you can start actually trading it, probably on a lighter risk, and as you're seeing it's working, bring it up to your standard risk on time-tested strategies. And that sounds like a lot of work. Well, yeah, it is. It takes time to put a good system together, one that you trust in, believe in, that you'll follow, that you won't tweak every 15 minutes. And also, that will keep you from tweaking if you make yourself go through that process. But go through, do that, learn those steps, keep that discipline, because if you keep the discipline, you'll be amazed at how good your trading systems get. And if you'll do that last step right there, I talked about that survey, you will learn things every day. You'll learn what you did right, and that's a huge piece. People leave that out all the time. Okay? And, this works with pets, it works with kids, it works with employees, it works with all people. Okay? When you praise them doing just the right thing. And, I talk about like my daughter. If I'm going to get on to her for misbehaving, I need to catch her doing the right thing more often, because then she, it reinforces the good behavior. And you need to do the same thing with yourself. So I traded well. I managed my risk. I took my stops. I did my entries where I was supposed to. I followed my rules. I trailed my stops accurately. I chose the right instrument. I used the right platform. I executed everything. You need to hear that. It's as funny as that sounds. You need to know when you did things right. It's very encouraging. And it also will reinforce. I want to be able to type that same paragraph out tomorrow of all those things I did right. So it incentivizes you. And then all of a sudden when you don't do things right, you have a totally different paragraph. And it stands out like a sore thumb. And this is for those who are wanting to be professional traders, who really want to be committed to it. And this is the reality of trading. It's not find me the special robot and hit a button and walk away and an ATM machine spits money out. But if you do it right, then you can trade well, and then you can have the luxury of taking time off when you want to. And I don't know. I think it's the best career out there, and I hope you do too. But I hope you'll have a great day, and stay tuned. We got another great show coming up for you right after this. David White with the Power Trading Hour.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.